come up a couple more ticks, but it's all good. Thing with a smack TP.
Hoping some type of profit.
Come on, 30. TP one hit. Moody's to break even. We good. Break even trade. Oh my God. He's in his shit too. Sheesh. My boy won. $200 more away from hitting TP. How much is that? How many ticks is that? Like 15 ticks. I just need 15. Watch 30 do something hella sus and then come back down. Full TP hit, gang. Full TP. Minutes. 519. That's 716. So I just got done dropping off the siblings, and I know y'all haven't seen my face in like some week and in a day, I think. So really 8 days. But everything has a reasoning of why I do what I do. Every time I get to a point where I feel like I'm glorifying or I feel like I'm taking too much time into something, I tend to take a step back and really evaluate myself. This time it's been a week from YouTube, and to be honest, it really did take a toll of me not posting. Also, it took me a toll of me making those videos every single day. I know I barely do anything in the videos. I'll be trying to find some ideas in order to catch that engagement so people can sit there and watch. Then that's what I'm thinking. I'm kind of overthinking it, or kind of overwhelming myself, trying to post these daily contents. And it does take a toll. I'll be honest with you, especially if you're not there financially, especially when you're trying to find things and really grow at the same time of out there trying to document your journey. So it's pretty hard being transparent with you, right? I just needed this break, but I know every time I do take a break, I always come back 10 times harder. I'm still posting on Instagram, I'm still posting on TikTok with my reels and everything, with the shorts. It's just the YouTube videos really took a toll, but that's that. But overall, W freaking day in the markets, right? Across 2 accounts, I made roughly, it was 1,300. Let's say it's a change times 2. Y'all do the math, right? And I really need $200 in order to pass the account on each account, so really $400. But I could chase that $200 and pass the account today, but I already took the max amount of trades that I took, right? The first trade I took was on NQ, and I broke even. Right, I was sitting with Wansky and I was just talking with some of the guys in there, and we got in a deep conversation. Didn't document, but I break even. The second trade on those US 30 longs that you're seeing, I took a bad entry, and I was like, man, I'm gonna just wait till it goes down a little bit in order for me to re-enter. So I did take like $100 loss, and then a trade played out. The rest is history. But we are supposed to get on a call a little later.
So this is how I drew it up, and like I said, could be wrong.
The advice I can always give somebody when doing that is like whatever challenge that you want to do. I don't know if you do prop firms or so. It's this prop firm. I'll send you a link where you can do like prop firm matches where it can show like what the pricing and what their challenges are, right? So I will base my paper trading around that. So just say if you wanted to buy a 50K account, I mean that's probably the cheapest one across the board of all brokers or prop firms, and then just do the challenges but on your paper trading in order for you to practice the practice, so you can be ready for the real thing. So you're just not paper trading just a paper trade. You're paper trading for a goal, or you're paper trading to practice on a prop firm. So when it comes to the prop firm, you already got that linked in your head, and also you're practicing your strategy, and also you're practicing your edge, so you'll be able to be better in the markets. That's what I did in order for me to pass these accounts. I mean, I'm not, humbly speaking, I'm not trying to, tap my own shoulder, but all with PG. Hey, she's very passionate. She's very outgoing. I know that she can do it as well. Like I tell everybody, I do these one-on-one calls for free. I don't ask for nothing in return. If I do, I want some food. I want to get fed. All right, that's it. But overall, if you want to join the print team, join the print team. We're live every single day. I'm not even doing call outs. It's not even like a signal group, but it's just a group that just stay together, especially if you're new to trading or if you don't know where to go. If you want to be around like-minded people, that'll be the best to be in order to be a print team. And plus, you're printing, might as well be part of the print team. All right, but we got to carry out our day. All right, then, y'all, this is how I made $13.74 today on US 30. So yesterday had closed out bullish, and everybody that knows how I trade, whatever closed out yesterday is going to be my bias for the current trading day. Okay. Yesterday had closed out bullish, so I'm looking for some type of longs of market going up. Okay. Scale down to a 4 hour, and I'm marking out my range. I'm marking out the high and the previous low on the 4 hour, and that's considered my previous day highs and previous day lows. Obviously, I can mark out up here and be like, okay, this is previous day high and previous day low. But the likelihood of price moving like that, and for me to catch that trade for it to sweep, because I do look for those false breaks in order for me to switch the bias. So I do want me to have this as the previous day high, which will be the current 4-hour high, and then the lowest of the 4-hour low as considered my previous day low, and then my previous day high. Okay. When price was going down at the time of market open, I wanted to look for bears, all right, for some short-term bears, all right. Even though the daily is telling me longs, the 4 hours telling me, okay, it could be bearish, because I had drew my fib 2 from here down to here, okay. And understanding this statement, I understood, okay, bet price had pushed up, we were in a premium area, and then it sold off. We respect this continuation area, so we most likely going to continue to take out these previous day lows, especially what happened last week. And I'm like, okay, bet that's going to be my bias. Even though the day may be bullish, within the time frame I'm trading right now with market open until 8 o'clock my time, I have to be looking for some type of bears. Scale down to 1 hour, and this will really open my mind. This is what happens with top-down analysis when you're going from top down below in order for you to find your trades. We had this gap right here, this new week opening gap that we had to fill, and those are strong like fair value gaps. They're like, please, like, pick me. They're literally calling like, pick me, trade off me, please, 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 please. All right, and I tell you, this was like high key level because we had a fair value gap from last week. Okay, mind you, we disrespected it by closing above it. Okay, and we have a new weekly gap. That's 3. They're layered on top of each other. In order for you to take a trade, it's like pick me, pick me, pick me. Price had came back down, rejected the area, and it rejected it multiple times. This is why I love US30, because US30 is like, hey, come play with me for a little bit, pause. But hey, I got you a good entry. Just gotta take the trade. You gotta trust it. All right. The 30-minute, bro, it was perfect. All right. Remind you, I am taking the trade off of a anticipated fair value gap. Okay, and I tell everybody this, and they're like, what are you talking about, Baggy? For in this case, it's 1, 2, and I don't see the third candle, right? The third candle on these higher time frames will be finishing my move, or that third candle will be retracing back into the move for me to take it. Okay, on these higher time frame, we have 2 entry points, and this is one of the entry points. One of the entry points is 1, 2, right? And we're anticipating that this third candle is going to continue to hit TP if the second one doesn't. Okay, I understand a natural fair value gap is this 1, 2, 3, and you're waiting for a retracement down, okay, in order for you to take a trade. But we're on a higher time frame. We may not see that. On lower time frames, you can eat up off them fair value gaps. But mind you, I'm seeing one candlestick at a time. So if I'm seeing this one candle, right, 1, 2, price is still fluctuating, right? Let me draw it over here so y'all can see what I'm talking about. Remove this because this is getting a little confusing. All right, so just say, boom. Here, bow. Okay? Give me the same example right here, but over here. Boom, we made this candle, and we're pushing. We're going up. Mind you, we're on a 30-minute. We're on a 1 hour, so it's going to take time in order for this candle to fluctuate. So we're going to be pushing. We're going to be going up. We're going to be going down. We may be showing a little bit. But if price is playing on top of this wick, right, this is a good entry point in order for take longs or whatever your bias is, but in this case it's longs, right? Take the trade off of it, anticipate it, so if it closes, now you can use that third candle to push to your full TP, right? That's entry number 1. Entry number 2 is if you don't get it off of here, off the second candle, that third candle may manipulate, fill in this fair value gap, and then reject off of it in order for it to go higher. Entry number 2. So I have 2 set of entries on a higher time frame. I'm telling you, once you miss your move on a higher time frame, it's pretty much GG. It's not like lower time frames where they give you opportunities where people take more trades, or 200, 300, 400, 500 right here in order to nibble and scalp. I'm trying to take the initial move. I'm trying to catch the wick and the body in order for me to take my trade. All right, I made 1374. Most people would take 10, 11 trades in order to get that, or sometimes even 2 when they're scalping on lower time frames. 8 to each his own. I'm just putting on thick to show you what I'm talking about. All right, I took 3 trades today, like I said earlier in the video. Is the first one I went on NQ, I broke even. Second trade, I didn't like my entry on here, right? I was a little bit higher, and I was already in drawdown. I'm like, what the heck? So I was down 120. So I'm like, okay, bet price comes back down, and top of this wick is gonna probably push up even more, right? And it did that, because mind you, we're coming off of a a key level, which is a disrespected fair value gap, a new week opening gap, and also this is a fair value gap. So that's 3 layers on top of why wouldn't you want to take that trade? That's a high key level in order. Probably most likely take out these highs. We may see reversal for tomorrow because, mind you, we're filling in this gap. Okay? On the daily, you could probably see, okay, bet we fell down. We're probably in the retracement. Wednesday, Thursday, Friday can be the bearish movement. Come on now. Basically, I trade higher time frames. I look at the daily for my bias, okay? I mark out 4-hour highs and lows, okay? Fair value gap fills. I use my fib tool, see where I'm at. And then I also use session highs. In order for some type of liquidity. And that's all I roughly trade. That's roughly what I trade in order to capitalize on these moves. It's basic. It's simple. It makes sense to me. Do you have to follow it? No. But I'm not sitting here waiting for 18 confluence for me to even enter a trade. I'm cool off of 4. I know it's more the merrier, but I'm cool off 4. Because I understand that if I go 3 out of 4, that's 75%. If I go 2 out of 4, that's 50% chance. Anything lower, that is a bad trade. People already got 50% run rates going crazy and living a lifestyle that me and you want. So why not shoot for 50%? I'm cool with that. Alright, but hey, overall, longer recap than usual. But hey, I hope that you guys took something from it. Alright, here's your boy, Baggy.